Now, before the Naira floated in June 2023, the official exchange rate was around 420 Naira to 460 Naira per US dollar on the investors and exporters window, administered by the Central Bank of Nigeria. However, the parallel market, that's the black market rate, was substantially higher, often between 750 Naira and 780 Naira per dollar, indicating a significant difference between the official and the real market values. By February 2024, we reported that the price of $1 was closing at about almost 2,000 Naira to a dollar, as it's reached an all-time high of about 1,900 Naira in the black market. However, a current report shows that the Naira has hit a mark not seen in almost a year. At the official market, the currency remains stable throughout October, trading between 1,500 Naira to a dollar threshold. Now, on the 17th of October, the Naira hit its lowest value of the month at $1,475.35, 1,475 Naira 35 kobo. That's for a dollar. Currently, it stands at even higher value, trading for 1,421 Naira 73 kobo per dollar. Well, according to Cornerstone, the domestic currency closed Friday at 1,450 Naira per dollar, demonstrating that the situation at the parallel market was not at all that different. I must tell you that. But let's start our week with this very good development, I must say, positive development, and amongst other developments surrounding Nigeria's economy. My guest is a finance expert, Mr. Gbolahan Olojede. He joins me for all of these conversations as we start the week on Business Nigeria. Mr. Olojede, good afternoon, and thank you so much for joining the program.
Yeah, good afternoon. Nice to be on the program.
Yes, I'm sure listening to my introduction, you will agree with me that something is happening in our foreign exchange market other than what we used to see before now. What do you make of this positive development? And for me, I would ask you, that thing we are doing right, how sustainable is it?
Okay, what has happened in the foreign exchange market is one of the wins that we have achieved thus far. I mean, you spoke, in your background, you spoke about the period of very severe volatility. We had gone from about 500 Naira to a dollar, even officially it was less than 500, though we know that that was just self-deceit, because how much you could actually get dollars, even in those periods, was totally different from what we were being told was the official rate. But the volatility was so bad that it went all the way from that 500 Naira, literally touched 2,000 Naira in the parallel market. So it was an extreme situation, especially in the in late 2023 and early 2024. However, something started to happen in the second half of 2024, and that was a semblance of some stability. It was initially in that 1,600 bracket. Then, between that half year and the end of the year, it was hovering around the 1,006, 1,005 bracket. What has happened in the current year is even more interesting, because the Naira has actually consistently firmed up against the dollar. So if you take a plot, of course you will see some little variations in between, but if you take a single line on top of that curve, you will see that decline from January all the way till November as we are. So you also now, if you look at the impact of that, you will begin to see the recovery of corporate profit from the 2023 blood. The books were bloody in 2023. Then 2024 first half was not particularly exciting either. In fact, in certain instances, some of the bloody nose of 2023 continue into that first half. But by virtue of the stability of the Naira, we are beginning to see the recovery of corporate profit, the most obvious one will be to look at the listed companies because their financials are public information, so anybody can pick them up. And when you now take those financials and you look at half year 2025 and you compare with half year 2024, is a huge, huge recovery information that is there. You know, before, we were talking about, oh, the banks, well, the only one making money. How can you be making money when everybody else is crying? But by the time you look at the comparison I'm talking about in 2025 vis-a-vis 2024, it is no longer a banking affair. Whether it is industrial goods or consumer goods or agri, every sector, oil and gas, every sector that you look at, you take the companies that are there and you look at their financials and compare it with what you have in 2024, you see a clear recovery and a flip onto a growth trajectory. I think the next thing to ask will be how we sustain or even grow, how we expand these wings and how we make it connect, percolate all the way down to the bottom rung of the ladder. It is a different thing when the corporate are posting profit, but there is a lag period between those recoveries and growth that we are seeing with the large corporate or listed corporate vis-a-vis the man on the street. But we can be deliberate about connecting it further. Naturally, it will happen in the market, but we can also take some deliberate policies into that space to make it happen faster than it otherwise would have been. So we've also seen inflation going down, and it is incidentally, initially, we could say, it was that rebasing of the, the basket, the inflation basket and all that, but it is going beyond all of that as well. So in my office, we normally buy rice every year. So when I compare the price, when I saw the invoices this year,
the price is lesser, right?
Yes, something is happening.
Well, that sounds good because everyone needs food on his or her table, and that's been my position for some time. That when we have policies like this, where there is a fallout, everyone would talk about how to address the vulnerable ones so that, they don't feel the impact of this. Because just like analysts like you would agree that we might be getting the macro perfectly, which is all of this positives around the FX market, positive around investors' confidence, positive around stability across the basically the economy and all of that. But some would ask you, how easy is it for the man on the street to feed? So what efforts, what's your assessment of efforts made so far? That's one. And what specific efforts do you think can be done more? We saw what the IMF reeled out to us. Yes, IMF says there are gains, they highlighted some gains, but on the other side, they also highlighted some of the challenges and shortcomings. How do we balance this up in your own understanding?
Okay. I agree with IMF on the part of saying, there are gains. Some of those gains, we are beginning to feel them, and we hope that they can be sustained, especially in the food arena. Now, what is going on with the food inflation might involve also things that were not by virtue of any specific policy. So, for example, if we are entering into a harvest season, food will be available, will be more available automatically. And therefore, whatever we gain from that, if there are no deliberate efforts, it means that when we are off season, because a lot of our agriculture, a lot of our farming is still rain-fed farming, they are not irrigation farming. So when we get into planting season and the harvest is off the table, prices might rise again. But for items such as rice, it might be a matter of the fact that maybe we allowed a bit more importation into the country to bridge the gap in our own production. But for a sustainable food inflation moderation, we are going to have to be more deliberate. The government, for example, has identified the fact that we have a problem with storage. So a lot of food items go to waste when they are plentiful in season. Having identified that as an example, the next question will be, so what have we done to be able to deal with that problem? It means definitely there has to be some investments to provide means of storage, of extending the shelf lives of products when they are in season, so that when they are out of season, because we have been able to preserve them, we can release from wherever we have stored them or in whatever form we have stored them. But if we don't do that, we are still going to have the same cycle of tomatoes being plenty when tomato is in season. And when it is out of season, what used to be 10 pieces will become 3 pieces. And the market woman might even abuse you on top for trying to price it. So we are going to have to be more deliberate. All those issues about yield that we have identified, all those issues about connecting centers of production with centers of consumption, with roads, rural roads and all the rest of it, we have to do it. Even electricity, if it is directed at specific storage-related issue or partial processing that will extend the shelf life of agricultural product, we need to look at it. So that is important for the sustenance of whatever we might be having in the food area for now. I'm also hopeful that we can begin to expand our rice production. There was a time we were moving, up the ladder, but I don't know what the situation is right now. I know there are certain importation which has also helped to moderate the prices. And honestly, people want to be able to buy cheaper things. They don't care whether you are bringing it in or not. So while that is going on and prices are moderated, we might consider going back to how we can expand capacity over a period so that local production will continue to grow and the volume that is required to be imported will continue to diminish. Of course, in areas of infrastructure, we must continue. I traveled over that Shagam Road over this last weekend. I saw the early part where they have started to do some concrete work, and it's beautiful, but it was just for a short period. I don't think the total concrete that I saw before we went back to the rough road was more than probably 4 kilometers. So if we can perhaps unleash those kind of, the construction, let it move faster. Now that we're especially coming into the season when construction can move faster, how fast can we move to deliver some of this critical infrastructure? Connectivity is very important. People must be able to move from one place to the other. Goods must be able to move from one place to the other as part of what will help us to sustain the gains that we have seen thus far.
Very interesting. And a lot around the economy, particularly as we move towards the end of the year. Mr. Olojede, you would agree with me that there are lots of developments. We've touched on the IMF and World Bank reports, which remains very important at this very time. Now, we are already in November. Before now, we're talking about the last MPC meeting next month. Next month now is this month. So in another few days, maybe in about 2 weeks or 20-something, I guess. I think it should be maybe 21st or so, but I know it's this month, probably towards the last week of this month. We'll be having the last Monetary Policy Committee meeting for the year. This meeting remains very important because decisions at this meeting obviously shapes the direction of Nigeria's economy, investors' confidence, and all of that. Now, considering this declining figures that you've alluded to, we all see inflation been reducing. We've seen the GDP figures also looking brilliant. Do you think that the Apex Bank and sitting down at that meeting, they would still consider to continue to ease on rates, considering what the real sector is going through at this particular time? Manufacturers, small businesses, this is not the best time for them to lend.
Yeah, even if it is on a cautious note, in which case I'm not expecting that the Apex Bank will drop rate by, say, 100 basis points. But in my opinion, what we did the last time by dropping it 50 basis points, having assessed how that played out and how inflation decline has continued to support that is the right decision, the Apex Bank should feel comfortable enough to do a little drop again. We've seen how Treasury bills, for example, that literally at the yield level touch 30% sometimes in 2024. How that same 364-day Treasury bill that touched a yield of almost 30% in 2024 had come down all the way to less than 16% in this discount rate in the current year. So that is a dramatic, decline in interest rate as it were. So, and with inflation coming down, because don't forget that how we got to this level of interest rate in the first instance was the fact that CBN was deploying the most important arsenal in its war chest to fight inflation. And that arsenal is interest rate. Now that inflation that it has been fighting appears to be yielding, it should give the right level of confidence to want to try another cautious drop in rate.
Well, that sounds pretty good. But in your submission now, let's pick out what you think would play out as we move, particularly towards the end of the year. We still have two or three more inflation figures. Okay, October, November, and December will come in January. So we have like two more figures to go. I would like to ask you, do you think that we could likely wrap the year up with a 15% inflation figure if that would happen? And even if that we hit at 15%, what is your major outlook for Nigeria's economy in its totality?
Well, I don't want us to be fixated on 15%. I think there seems to be a lot of pressure on prices in December. So I don't know how, if that will allow a dream of 15% to come true. And like I said, we shouldn't be fixated on that. Rather, our fixation should be on the wins that we can see right now, and what do we need to do to sustain them, to expand them, and to make them percolate down all the way to the lowest rung of the ladder, so that the man on the street can also feel what he said he has not been feeling. So I think the outlook is good. We've been seeing the Q3 results that have been released across sectors. We've seen the banks as some corrections are beginning to come in. Most of those huge foreign exchange income are disappearing, and banks are getting more focused on what should be their core business anyway. So we've also seen the industrial, we've seen some of the consumer goods, we've seen their Q3 result coming out very strongly. I also believe that even the full year will come out strongly. For the first time since half year 2023, one of the leading telecoms company has declared a dividend. It has flipped from a negative shareholders fund in 2023 to back to a positive shareholder fund, and has made the revenue like never before. So these gains portend a bright year ahead if we manage the process properly. If we don't drop the ball, it will definitely be a bright 2026 for the economy of Nigeria. Reserves is on the rise, as we have seen it. Well, I also hope that the geopolitical pressures will not come and negatively pinch on all these gains. But from all indications, we are on to a bright side in the year ahead.
Mr. Bola Olojede, I must thank you so much for your time. And thanks for starting the week with us on Business Nigeria. We appreciate this. Do have a profitable one.
Thanks for having me. Have a good one, too.